Hey, thanks for joining us today. We're back talking all things real estate, and today I have a recent report on global news.
Giddy up
So,
before they get defunded.
yeah, or whatever. Who
Anyways,
knows?
let's see what they got to say this time.
Okay, so the headline is how high will home prices get in 2025? And the response depends where you live. So,
Right, because real estate is a very local thing, and
that's
it
right.
really depends on so many different factors.
Yeah.
Yeah.
Yeah, and we've talked about that a lot on this channel that you can't make carte blanche statements for the whole country because we are such a massive country geographically and different things are relevant in different markets and so on. So,
Unless you're talking about the center of the universe, Toronto, then we can just ignore all of the rest of
everybody
Canada,
else,
right?
yeah.
Yes.
Yeah.
Okay.
So, and we'll get to that because
Oh,
Toronto shows up in
it's on there.
Yeah.
Wonderful.
So, okay. So what we know so far is home sales. I'm just going to give you some background information. So home sales were up 10% nationally in the fourth quarter of 2024. Okay.
That seems reasonable.
Yeah. So they had a bounce, we had a bounce back, finished strong. So
Is it the dead cat bounce?
we'll get to that too. Maybe it is.
Okay. We'll see what the global has to say about these
So,
things.
okay. Some Canadian real estate watchers are expecting borrowing costs to hit their floor at the same time sellers flood the spring market with listings, unleashing a flood of activity in many housing markets across Canada in early 2025. Now,
An atmospheric river of listings.
there you go. We used to just call them storms, right?
Yeah.
Okay, so let me continue on. That would set home prices higher in many cities. Here we go. But not all markets will feel the forecast housing rebound equally, which we know that, right? We've been talking about that quite a bit. So, CREA said that while December sales fell flat with a 5.8% monthly decline, higher activity in November and October helped to power the final fourth quarter of 2024 to a stronger result. So basically the whole quarter is what made that bounce back. So what they're saying is there's a little bit of a dip in December.
Right. We started seeing jumbo rate cuts 3 times in a row, 2 times in a row, whatever it was.
Yeah.
And then Christmas time, it's like, oh, seasonally, it's going to slow down because
Yeah.
we have other things to do now, right?
Yeah.
But still, it still was even for being seasonally slower, I found it quite busy.
Yeah. So, okay. CREA senior economist Sean Cathcart told reporters at a press conference that if the Bank of Canada delivers a couple of more rate cuts in the months to come, which is what the expectation is right now, and signals, the policy rate may have found its settling point that could set up a wave of activity in an already traditionally busy spring market. So the expectation is the Bank of Canada, and this is kind of what I've seen in what I've been looking at and reading, is that the expectation is the Bank of Canada may have 2 more rate drops. They won't be big ones again. But that after that, they'll probably we're going to stay stable at this number. And I think you've got people that are thinking, well, I'm going to wait right until I know that it's not going anywhere else.
Yeah.
And then I'm going to jump in. So,
Yeah, no mention of last year's activity. Like, we had very slow start to the year. It was
yeah.
like our spring market basically fizzled out and didn't start picking up until like the end of summer.
Yeah. So,
And then actually like a spring market hit in October, November.
right. So, so this is talking about Cathcart. He tempered the call, talking about the lower rate of interest rates and the picking up of the market, by noting that the Bank of Canada's policy rate is not expected to return to lows seen before and during COVID. So we're not going back to that extreme number again. So he goes on to say affordability has improved from last year, but affordability is still tougher than it has been for 20 years. So it will bring some buyers back, but we're not going back to COVID levels of activity.
Of course, again, this goes back to like broad brush strokes across Canada,
Yeah.
where there's equity-driven markets Victoria's sort of in the middle of one of those.
Yeah.
And Toronto and Vancouver, or the GTA, Greater Vancouver area.
Yeah.
Well, if you want a market that's matched to your salaries, you have to move to those markets.
Yeah. So, okay. So, there's a bunch of other stuff I'm just going to jump through.
The good
Okay.
stuff, yeah.
Korea is calling for average home values to climb 4.7% on a yearly basis in 2025, leaving the typical sale price at $722,221 by the end of the year. That's a pretty broad brush stroke to say all across the country.
To go up almost 5%.
That's what they're saying.
Yeah.
Yeah. But Cathcart said that Korea predicts a vast difference in activity and price growth from market to market. So here we go. British Columbia and Ontario, Canada's two most expensive provinces to buy a home, are expected to see a rebound in activity, in part because they've slowed so much recently and have more room to recover. So the prediction is there's going to be a bit more of a rebound in British Columbia and Ontario because we took the biggest hit already.
So our pendulum swings greater than the other
That's right.
provinces because also our price is higher. It swings higher one way. Like this is always the case, right?
Yeah.
The high-end properties, the waterfront properties,
Yeah.
they swing higher. All the basic entry-level homes
Yeah.
or areas or markets
Yeah.
don't tend to swing as much.
Sure.
So
So he goes on to say, but that could come with limited price hikes because these already unaffordable markets are swimming in inventory, particularly Toronto's condo market.
yeah.
So they addressed that specifically, and we've talked about that as well, that there's a massive surplus of condos as they come on the market in Toronto. But and those prices are dropping, but single family homes continue to sell and the prices continue to hold stable, if not move up a little bit in Toronto's single family home market.
Yeah, and as we know, there's a war on single-family homes.
Yeah.
Right? We're
Yeah.
having more and more government policies that are, they want densification.
Yeah.
They want missing middle housing initiatives. So they're going to turn single family lots into fourplexes, sixplexes,
Sure.
whatever.
Yeah.
So yeah, single family homes will continue to be like the gold standard of the Canadian dream of home ownership.
Sure.
They will always, no, maybe not always, but there's certainly going to be the most desirable piece of property.
Yeah. So the recovery is already well underway in the prairies and some East Coast markets, Cathcart added. Relatively affordable Alberta and Saskatchewan are expected to be in high demand this year. Inventory levels are already near 20-year lows there, meaning that prices could have room to climb.
Right, and we have a better interest rate environment. It's easier to get in
Right.
now than 6 months ago.
Yeah.
So, yeah, okay.
So for the
makes
prairies, yeah, so here's his quote for the prairies. For every 10 buyers, there might only be 5 homes in the prairies. So Korea projects that markets such as Quebec, Manitoba, and some Atlantic provinces will fall somewhere between those extremes for price and sales appreciation. So TD also, made a comment, and I'm not going to get into all of what they had to say, but they did say that there's some uncertainty. Their part is uncertainty because of potential tariffs coming with the United States. So,
and it depends on how Canadian politicians and leaders react to this. Yeah.
yeah. So the expectation, and we talked about this already, the expectation is that, or was, and we said that we're going to see the market rebound this year. We're going to see people getting back into the market we're waiting for the interest rates to stabilize, and we're going to see the market start to, pick back up again. Maybe not crazy like obviously we saw it during the COVID time, but that we're going to see markets picking back up again, and we are heading for a balanced market. I think that's where we'll end up this year, without
maybe
knowing
a slight increase.
Sure.
Yeah.
But without knowing what's necessarily happening with the U.S. and Canada and trade relations right now.
Yeah, there's a lot happening. We don't know what's going to happen in this year. I still think even if it's a little bit of a bumpy ride. It'll be like a stable market.
Yeah.
There's not going to be a sense of urgency to jump in.
Yeah.
And I think a limited amount of people are going to be in financial hardship that they have to like give away their house.
Right.
So there's going to be a bit of a balance, and we're looking at, maybe some optimism coming into an election finally for Canadians, that the economic outlook might look more positive.
Yeah.
So if people feel good about their futures, they're likely to make long-term commitments.
Sure.
So, and with interest rates even inching down a little bit more, have we seen the bottom of prices? People feel good.
Yeah.
Even when the market's taking off like crazy, people feel emotionally justified to pay the price because they believe and feel that the price of homes are going to be more, maybe not tomorrow, but in the near future.
Yeah.
Right? It's hard to commit to something that is going to be worth less tomorrow than it is today.
Yeah.
Except for cars somehow.
Yeah.
But homes, yeah, people don't like that.
Yeah. That's it for today in terms of the article. But I think it's like what we've been saying. We're expecting the expectation from my perspective, and I think we just said it's a balanced market. I think we're heading for a balanced market, and we might get, at least here, we're talking about the greater Victoria area, where we might get a little bit more upward pressure on prices, but it's not going to be, crazy. Like, let me put it this way. I think from what I've read and looked at so far, the prairies are going to see more of an upturn than we are.
Percentage, maybe not dollar wise.
No, for sure.
Yeah.
Yeah. But just the percentage base. Yeah, for sure.
Absolutely.
So, all right. Well, thank you for joining us today. And if you haven't, give us a like for the video, subscribe to the channel so you don't miss out on anything. We're putting out piles of regular content every week, and we'll see you next time.